Assalamualaikum and have a good day. Today our group will be discuss about the performance comparison between 7-Eleven Malaysia and Mynews Holding, and I will focus on their company background and value proposition. Before we go deeper, let me introduce our group member that consists of Hafiq, Farah, Yaya, Shami and Farhana. On this slide, I will compare the companies across 4 aspects, which is establishment, leadership, location strategy and operating model. First, 7-Eleven Malaysia was established on 4 June 1984. It operates as a holding company with retail operation carried out by 7-Eleven Malaysia Sdn Bhd. In terms of leadership, the chairman is Datuk Wira Farhas Wafa Salvador and the company is led by co-CEO Tan Yong Min and Wong Wai Kiong. For scale and location strategy, 7-Eleven has more than 2,400 outlets and 536 7-cafe outlets with nationwide presence. Its operating model is largely standardized, supported by a strong 24-hour convenient format. Next, Mynews started in 1996 as MatchBeat and it was rebranded in 1997 as Mynews. The chairman is Deng Tai Lu and the CEO is Dang Tai Wen. Mynews operates 679 outlets, mainly in prime urban and high traffic location. Unlike 7-Eleven, Mynews follow a multi-format operating model covering Mynews, CU and Super Value format. Overall, the key difference is that 7-Eleven is scale-led and standardized, while Mynews is format-led and more segmented. For 7-Eleven, the value proposition focuses on everyday convenience. It provides daily essentials for quick top-up purchase, as well as food and beverage, including ready-to-eat meals for the on-the-go consumption. The 7E concept enhances convenience with a cafe-style option. Overall, its customer value is built on speed, reliability, and a consistent store experience. For Mynews, the company offers convenience retail products across Mynews and CU format, while strengthening its foods category through ready-to-eat meals and bakery products, supported by in-house production. Maru Cafe is positioned as add-on to strong food and beverage demand. In addition, Super Value Minimart expands the essential range with value pricing, supporting a more price-sensitive segment. Overall, Mynews delivers customer value through format variety, food ecosystem integration, and value driven. In conclusion, both companies meet daily convenience needs, but 7-Eleven competes through coverage and consistency, while Mynews differentiates through multi-format strategy and value positioning.
Gearing ratio measures the level of debt compared to equity. It shows how much a company relies on debt and indicates its financial risk. In 2022, gearing ratio for 7-Eleven is higher due to aggressive expansion of the 7-cafe outlets. High refurbishment costs increase the company reliance on borrowings. For Mynews, the higher gearing ratio in 2022 is due to the expansion of CU store. High operating costs and low utilization of the food center increase the funding needs. In 2023, 7-Eleven gearing ratio decreased because of the disposal of its stake in Caring Pharmacy. The proceeds were used to reduce borrowing and strengthen the balance sheet. In the same years, Mynews also recorded a lower gearing ratio due to improved operating performance and stronger cash generation. This helped the company rely less on borrowing and reduce its overall debt level. Next, in 2024, 7-Eleven gearing ratio increased slightly due to higher operating costs and weak profit performance. In addition, the absence of income from Caring Pharmacy after disposal affected the company earnings. As a result, company relies more on borrowing to support its operations. In contrast, Mynews recorded a slight decrease in gearing ratio after returning to profitability. Higher revenue and better sales performance strengthen internal funds and reduce the company reliance on debts.
Firstly, let's discuss on which dividend policy adopted by 7-Eleven and Mynews. Based on the annual report, both companies pay dividend in the form of single-tier cash dividend and pay dividend twice in a year in terms of the interim dividend and final dividend. However, 7-Eleven only gives interim dividend and no final dividend is given in the year 2032 until 2034. Meanwhile, Mynews only gives interim dividend in the year of 2033 and 2034 and no dividend distribute for 2022. Next, 7-Eleven usually make a dividend distribution on May each year, such as in 2024 on 28 May 2024. Meanwhile, Mynews usually declare dividend at the end of the October and paid at the beginning of November each year. In conclusion, 7-Eleven approach align with a stable dividend policy. Meanwhile, Mynews approach align with constant payout ratio. This is because 7-Eleven's dividend is predictable and gradually adjusted, while Mynews pay dividend at a static amount level for 2 consecutive years. However, both companies maintain consistency in dividend payments over the year, even when earnings drop slightly, and this align with shareholders' expectations. Based on the annual report, 7-Eleven does not follow theory, which hold the increasing individual will not affect investing and financing policy in the market, even if the company has to sell share. However, 7-Eleven adopt the traditional theory, which practice practical and consistent dividend payment with substantial reinvestment for the company's sustainability and growth initiative. Next, based on the annual report, Mynews also does not follow the theory. However, Mynews adopt and practice that align with radical left theory. This is because Mynews pay a small amount of the interim dividend, which is only 0.50% for 2023 and 2024, and retain the majority of its earnings. This policy reflects that management believe that higher dividend distribution to shareholders will decrease company value by diverting equity to investment and operational needs. Firstly, 7-Eleven showed a decrease in dividend payout ratio from 43.70% in 2022 to 32.89% in 2023 and rise by 49.110% in 2024. Meanwhile, Mynews experienced 0% dividend payout ratio in 2022 and negative rate of negative 32.89% due to losses during the year. However, Mynews experienced a sharp decrease by 40% in 2024, meaning that 40% from earning as a dividend and the balance 60% returned to reinvestment. Lastly, 7-Eleven showed an increase by 45.90% for dividend growth rate from 62.50% in 2022 to 107.69% in 2023 and decreased to negative 50% in 2024. Meanwhile, Mynews experienced 0% dividend growth rate for the past 3 consecutive years. 7-Eleven showed an increase by 45.9% for dividend growth in 2023 but decreased to negative 50% in 2024. The factor influencing the increase in 2023 was the complete disposal of its pharmaceutical business called Ascarin Group, who was generated 175 million and one-off profit of 262.8 million. 7-Eleven utilized the total cash consideration, which used as much 61.60% for the expansion of the 7 cafe store and followed by 37.04% for the borrowing. Next, 7-Eleven showed a 50% reduction in 2024, which is caused by a decrease in net profit by 24% in the third quarter of financial year 2024. This fluctuation is caused by an increase in operating expenses by 8.6% due to higher store operation and logistics, including increased operating hours and expanded forces with an increase of 79 new stores. Lastly, 7-Eleven prioritized reinvestment in sustainability initiative by investing 1 million in installation of LED lighting across 100 of stores in Malaysia and invested in expanding the store to become 7 cafe. Therefore, 7-Eleven's strategy to invest in 7 cafe stores be successfully in third quarter of 2035, which 277 new 7 cafe stores was established, resulting in a total 748 of 7 cafe stores. Mynews adopt a highly conservative and non-committed dividend policy with 0% dividend growth for the 3 consecutive years. Next, Mynews decision to initiate dividend payment in 2023 despite suffering a net loss of 50.4 million reflects a strategic move to maintain investor confidence. In addition, if net growth rate from 0 in 2020 to 0.50% of dividend DPS, supported by robust operational strategy rather than accounting profit. Next, maintenance of dividend growth rate at 0% until 2034. Even Mynews made a profit, explain Mynews in restructuring of Mynews operation with the new launch of a new format. As a rapidly growing convenience store, Mynews prioritized reinvestment of all capital available in the company by implementation on a store expansion program by targeting 100 new CEO convenience store annually after obtaining a license from South Korea BGF Retail Co. Ltd. Therefore, Mynews invested approximately 46.33 million in the right of US ROU for the new store premise and 5 million to 7 million for the digital platform development. However, the success of this initiative can be proved through the company's store count increase approximately 80% store between 2023 and 2024. Lastly, Mynews always prioritized debt reduction over dividend distribution, resulting in reduced borrowing by 7.4% in 2023.
SEC represent the average cost incurred by a firm in raising funds through both equity and debt. It reflects the minimum rate of return that a company must achieve in order to satisfy its investors and lenders. The WSEC widely used as a benchmark or hurdle rate when evaluating investment and expansion projects. WSEC serves 3 key roles in investment appraisal decision. First, WSEC as the investment hurdle rate or discount rate used to evaluate whether a project expected return is sufficient. Second, reflecting the firm's overall cost of capital, combining both debt and equity costs. Third, guiding capital structure and finding choice by indicating the optimal mix of financing that minimize costs. Next, definition average cost of debt. The average cost of debt is the weighted average in interest rate a company pays on its borrowing. The graph shows comparison post-tax cost of debt. First, 7-Eleven post-tax costs range from 3.5% to 3.70%. Second, Mynews post-tax costs range from 2.70% to 3.78%. Number 3, a lower cost of debt reduces WSCC, making project easier to justify. Number 4, 7-Eleven lower borrowing costs contribute to more favorable WSCC and stronger financial efficiency. Analysis 7-Eleven WSCC. First, rising cost of debt 2022 to 2023 due to the Bank Negara Malaysia monetary tightening and OPR hikes. Profit growth slow in 2023 amid rising operating costs. Aggressive store expansion like 7-Eleven Cafe format raised successive business risks, reflected investor concern over profitability and expansion finding. Number 2, capital structure impact. High reliance on debt financing. Debt value remains significantly larger than equity throughout the period. Number 3, late 2024, WSCC increased to 3.72% due to stabilization of interest rate, improved credit profile, AA rating affirmation by MARC, shift in investor sentiment amid better microeconomic outlook. Analysis minus WSCC. First, rising cost of debt influenced by Malaysian highest interest rate environment. Number 2, improved profitability and reduced equity risk. Return to profitability in 2024 after pandemic era losses. Positive stock performance in 2024. Consecutive profitable quarters. Reduced equity risk premium as business outlook improve. Number 3, 2024 WSCC increased to 3.77% due to the highest cost of debt from persistent interest rate pressure, ongoing store expansion and capital need.
For analysis on overall performance for both companies, looking at the capital structure, both companies are finally conservative. 7E reduced its gearing from 6.14% in 2022 to around 3.9% in 2023 and 2024, mainly because of the disposal of Caring Pharmacy. This shows lower debt and lower financial risk. Mynews has a very low gearing ratio, declining from 1.12% to 0.94%, which shows a very cautious approach. While this is safe, it also limits its ability to grow aggressively. For dividends, 7-Eleven has a volatile policy with a big increase in 2023 due to one-off gains and a decrease in 2024 as costs rose. Mynews, however, has a stable fixed dividend of 50 cents even during loss, showing that they focus on investor confidence. In terms of cost capital, both companies have low and similar WSCC, around 3.6%, indicating low financial risk. 7-Eleven benefits from a slightly lower cost of debt, while Mynews WSCC increased slightly in 2024 due to its return to profitability. So for our recommendation for Halfway PLC, based on this analysis, we recommend investing in 7-Eleven because it has stronger financial stability, largest market presence, and strong cash flow. It is more resilient to economic change. So Mynews show promising growth and recovery, but is still in a transition pace. It is better considered for future investment when profits and growth become more stable. For conclusion, for Halfway PLC is a low risk and sustainable investment objective. So 7-Eleven is the most suitable choice at this stage. So that's all from us. Thank you.